Some big things happening this week that could cause the banks to panic a little bit. I'll break it down for you. My name is Paul Barron. Welcome back into the show. Let's get started. I do want to thank our sponsor. That's Tangem. This is a place where you guys can get into self-custody. It's very easy to set up. These are like credit cards. They work with your phone, and these are physical objects that become a self-custody wallet just for you. The cool thing about Tangem is it's very easy to set up, and that is one of the most secure elements around it in terms of how it sets up and then how it connects to your phone. You guys check it out. Use our link down below. It's going to get you guys into it and a little bit of a discount to get started. All right, I want to hit a couple of points real quick. As you guys know, ISO 20022 begins today, July 14th. All this is going on. And of course, with that, the implementation around this is going to start to have a bit of effect on FedWire. Now, the question is how much of an effect will this really have when you consider where the banking industry is going, and a lot of the digital assets that are associated with this, just on the watch list right here, XRP, Cardano, XLM, HBAR, all of these that had ISO 20022 in their roadmap and also within their integration, had, of course, a pump over the weekend. A couple of points within there. There's a couple of companies that we're tracking. One is ACI Worldwide. I'll show them in a second, and also Braid Technologies, both of these of which have a integrated component. Here, of course, is ACI and Swift. One thing you'll notice here, I've got highlighted right there, is how Ripple is integrated into this, around where ACI and Swift are going to start to integrate around these new standards. Not only that, then you've got Braid. This, of course, is very heavily related and tied to Ethereum. So Ethereum, XRP, both on front and center within this. I've got a clip here before I bring my guest on today, and this is Caitlyn Long talking about what kind of impact this is going to have. Take a look.
The vast majority of corporate payments go through FedWire. Your payroll will typically go through ACH. That's 100% banks. There are no fintechs that have access to that. Right. When Citi put out an optimistic forecast that stablecoins, which are about 200 billion now, will be at 3.7 trillion by 2030. I said that's laughably low. FedWire right now is processing $1.1 quadrillion in payments. So 3.7 trillion is nothing compared to that. ACH is about 87 trillion. And the biggest ACH providers are JP Morgan and Wells Fargo. They clear more than half. They have more than a 100 times markup on those. Okay, so no wonder why JP Morgan is suddenly flipping and embracing it. And then the cross-border piece is also huge. I think it's around 260 trillion. 3.7 trillion is a drop in the bucket. We're going to be way above that, I think.
Yeah, no, these are extraordinary numbers.
Maybe this is way underreported right now in terms of what the capacity is going to have. So we thought, let's bring on some experts. This, of course, is Stephen McClurg, who is the CEO of Canary Capital, joining us today. How are you, Stephen?
Hey, very good. Thanks for having me, Paul.
Yeah, good to see you again. First of all, let's get into a couple of details. I want to jump on to what's happening this week in alignment with ISO 20022, and that is Crypto Week. Crypto Week is happening. We've got Clarity Act coming in, the Anti-CBDC Surveillance State Act, also Genius, most likely going to take place. When you look at that right now, is this a coincidence that all of this is coming together at the same time? I'm just wondering.
I don't think it's too much of a coincidence. There really is a push by the current administration to get all of this wrapped up by August. Mm-hmm. And in addition to what you're seeing right there, there's also and this has been widely reported. I'm not sharing anything that's secret.
Right.
But now it's being widely reported that there's a framework coming out for crypto within exchanges, public exchanges, meaning a generic listing standard that the SEC has been working on for the last, since January, that will decide which cryptocurrencies can go into an ETF or not. So that's, again, been widely reported, and I'm sure that that's being worked on this week as well. So you also have that. So there is a lot happening right now. So we're very excited about the progress here.
JP Morgan has been on record around this because talking about the use case of FedWire. I want to play a clip for you, Stephen, and get your opinion. Let's take a look.
So fintech stocks sold off Friday after a Bloomberg report that JP Morgan plans to start charging for access. Now, at issue here is the data that fintechs use to link customer bank accounts to apps like Venmo, Coinbase, and Robinhood. Now, PayPal led the drop, down more than 5.5%, with Affirm, Fiserv, and Chime also sliding. Robinhood was the least affected, still holding up. Now, that access has typically been free through aggregators like Plaid and MX, which connect banks to fintechs, but JP Morgan is reportedly introducing new fees that could be passed from aggregators to fintechs and potentially consumers. The charges may wipe out the revenue from a single transaction, clearly rattling investors today.
So this isn't Plaid charging. This is JP Morgan, a major bank customer, saying that it's got the heft to say, OK, now everybody, you got to pay up and figure out how the costs get passed around.
And in the case of these fintechs, they rely on those thin margins to offer free or very low cost services. And even the slightest disruption can have major ripple effects across their business model.
All right, so this starts to play into two major areas. Obviously, Ripple, all tied to how this is going to connect for larger funds. But what they're talking about there is more of the banking services, interconnect. Robinhood, who they mentioned, interestingly enough, Robinhood announced their Robinhood banking program here just recently. So Vlad has got this in his roadmap. Maybe that's why Robinhood is not being affected as much. Do you think we're in a position right now where we're going to start to see Robinhood just not scared of what's happening with JP Morgan?
I don't think Robinhood's scared at all. Some of the things that Robinhood's doing, in addition to going after their own banking charter, as well as obviously a big trading platform for equities and cryptocurrencies, is they've also allowed for staking for certain proof of stake protocols. So that's something that's definitely going to put them ahead of the game when it comes to other platforms. And they're not the only ones either. So you've got you have Fidelity, obviously working on innovative tools. You have Schwab that's looking at adding cryptocurrencies directly on their platform. And I think we want to talk a little bit more about payment rails, which I think is way more important. But these companies aren't as afraid. And JP Morgan's been working on their own blockchain for years. So you've got JP Morgan, Schwab, Robinhood clearly in the driving seat right now. But you also have firms like Ripple and Interstellar and some of these others that have been building these rails for years. And we'll probably see a lot of traffic move to those rails.
Yeah, well, I think the numbers are going to be significant. Another area that we're watching, Stephen, is the point of sale systems that are out there. JP Morgan launched this not too long ago. This was something we reported on. This potentially kind of circumvents, the traditional merchant services out there. That's an actually JP Morgan PIN pad and PayPad that you'd be able to use. Now, when you look at that, there's a couple of other companies that have started to go kind of in that direction. And one of them has been Zeno. And ZenoPay, of course, tied to Ripple. This will be another one that could play into this. When you look at how all of this is starting to integrate, where Ripple is on potentially the payment rails, do you think Ripple is setting up for maybe a point of sale play similar to what JP Morgan has done?
Yeah, I do. I do think that they're driving towards that. And there's going to be a race on the hardware side as well, right? So the point of sale systems are going to be an important integral piece, and there's going to be a major race to get those in to a lot of retailers.
Right.
You already have the credit card scanning software. Now you need software that enables you to scan using other protocols and chains. Visa,
MasterCard has kind of controlled that for a while, so we'll see how that plays into this going forward. Obviously, JP Morgan trying to make a move there, and I think you're right. We are going to see maybe a crypto company that will break rank here and get accelerated on this pretty quickly. Could be Ripple. We'll see. Let's talk about XRP ETF filings with the SEC. Obviously, you guys are at the top of the list right there behind Bitwise, and it's looking pretty good. But the question is when? When do you think we're going to see these things take place? How do you feel like the SEC is pretty much loosened up enough to where we're going to see one of these get launched?
Well, as I mentioned a little bit earlier, there is a move right now for the framework for which ETFs will be allowed or which tokens will be allowed in an ETF and which ones aren't. I firmly believe that Ripple, is paving the way on a lot of other different things here. So, and obviously the connection with XRP. So I believe that XRP will be one of those tokens that will be in an ETF when all of this launches. There's a very clear court precedent now that's established XRP is not a security. It will easily be moved into a 33 Act fund. And I actually believe out of all the ones that are pending, we already have Bitcoin, we already have Ethereum, but out of the pending ETFs, I think XRP is going to get the most traction and the most AUM.
Why do you think that? I mean, what do you feel that institutional will understand what Ripple is up to, and that XRP is the driving fuel behind it, much like where Ethereum is to, stable coins?
Yeah, I mean, and the two that I'm really looking at, because they're the most popular, obviously, are Solana and XRP. So I do believe there's going to be a lot more of a retail push into Solana. But those people that are buying Solana at the retail level are more easily buying them on crypto exchanges. So I don't know if there's going to be as much flow on that side of things. Whereas on XRP, it's really rails for financial services. Yeah. So I believe that there's going to be a lot more of a financial advisor, a institutional type push here. So maybe out of the gate, it won't be as popular as Solana, but as time goes on, I do believe that XRP will probably have more AUM than even Ethereum.
Ooh, okay. Now we're talking. That's a big statement. Thinking of that, you have to look at gold bugs, because I think gold bugs understand this and how to go out and buy ETFs. They've been doing it for a long time. This was Ainsley Bullion, and the reason I wanted to bring this website up is their analysts made a statement that was pretty striking to me in comparing how this could apply to gold investors. Let me play a clip for you.
Out of the blue, Ripple decides they want to go apply for a Fed master account, and I'm just like blown away. It is a massive, massive move that is directly linked to the Federal Reserve, assets held on the Federal Reserve balance sheets, a system whereby they could access the Fed window, repos and so forth, settlement options in FedNow, FedWire, ACH, but then it also taps into all overseas liquidity needs and management. It's blowing my mind how much this could really just create a whole new infrastructure. Ripple were having meetings with the BIS. They've had meetings with the IMF, the European Union. They're all these big players. You've got the EVM, Ethereum Virtual Machine, EVM sidechain, which just launched, taps into 80 blockchains. They've got Wormhole, which taps into Solana, Flare, Axelar, Cosmos ecosystem. It just seems that the things are really starting to line up to launch in a very major way, really starting to get started. If you can't tell, I'm getting a little excited.
All right, so intriguing that you've got other ancillary markets that are starting to recognize these things, and they understand how money moves, they understand how money works. You look at ETFs in general, I'm just looking at the AUM right now on percentage of market cap. ETH at about 3%. I'll kind of zoom in on that so you can see it a little bit, but 3% versus Bitcoin around 5.6% on assets under management. Do you think we could see XRP and ETH start to elevate to that 6%? In other words, double what we're seeing right now in AUM?
No, I really do. And again, mainly it's because of the understanding of what it is as a financial rail. And I'll be honest, 4 years ago, I didn't think they had a chance. Mm-hmm. Under the last administration, there was no room for competition to FedWire. And now there actually is room for that. And we're probably going to see a lot this week out of pending legislation. But I do believe that, the world is wide open and there's going to be a race here. And I do believe that Ripple is probably best positioned to take advantage of that race for financial wires over probably any other protocol.
Interesting. Well, I think there's a couple of points that you're making is not only the market leader and dominance position, but I think a lot of people forget just how many partnerships Ripple has done over the last several years. Because they've been, while all this litigation was, first of all, kudos to Ripple, all that litigation was kind of keeping the home front at bay while they were doing partnerships around the world. They mentioned BIS, et cetera, that really are impacting this. All of this could lead into altcoins and the altcoin market. I was looking at you guys' weekly market review. Do you think we're going to see an altcoin market and season like what we've seen in the past, or is this one going to be completely different like any one we've seen before?
Yeah, look, I was just on a panel a couple of days ago with two other guys, and we were all over the place. There's a big contingency that believes that altcoins have seen their rally. January was the top, and there will be no other rally this year. It's done. And then there's a big contingency that believes that there will be a massive rally on altcoins, mainly having to do with things like, looking at Ethereum, for instance. The yields on Ethereum is at all-time lows, but the queue to get into validators is at an all-time high. The number of tokens on validators is at an all-time high. People that are staking is at an all-time high. So usually when you have a lot of long-term staking activity across protocols like that, then altcoins rally because you can't move it around, you can't trade it. So there's really only one direction that up. I'm a little bit more neutral. I'm in the camp of Bitcoin will continue to rally up to about probably 140, and altcoins will follow it. Some will outperform, some won't. There will probably, like Solana's one where there's a lot of, I've got nothing against Solana, but there's a lot of interest, but I don't believe it'll hit a new all-time high this year. I don't believe Ethereum will hit a new all-time high this year. I mean, it hasn't hit an all-time high in 4 years. It's going to be the newer tokens like, things like SWI and Injective, Axelar. Those are the ones that I expect to hit all-time highs. The newer technology that are building really interesting things. Say is another good one. Those protocols will compete and likely hit new all-time highs, where some of the bigger ones won't. I don't know where XRP price is going, just given where the current legislation is, but I do expect it to hit all-time high for the year at least. And so it's going to be a mixed bag, but I'm in the camp of neutral. The alts will follow Bitcoin, and by the end of the year, we'll probably see peaks and maybe a trough next year. Yeah, for sure. This is a question that's being asked around not only Bitcoin treasury companies, Ethereum treasury companies, and now XRP potentially treasury companies that could play into this. And that is, do you own the core asset and look at those yields, or do you own the ETF, or when I say the core assets through these publicly traded companies, and look at dividends there versus yields coming in from the ETF side of things? What do you think is going to be the model here in terms of who wins? It'd be like comparing IBIT to Master. Yeah, I mean, look, I think it's going to be mixed because if you want a pure play, let's say you're a financial advisor and you're buying something for your clients, and you want a pure play for them that you can control, then you're going to buy the ETF because that's exactly what it is. It's a pure play token. You know exactly what it is. There's no operating company in there. You know what your fee is. Everything is very generic and everything's very simple, and you know exactly what you're getting. With a lot of the treasury companies, I actually think it's a great idea that there's a lot of treasury companies out there because, I mean, look, I used to invest in companies that held different foreign currency. And now a lot of cryptocurrencies are treated like that foreign currency. I'm interested in some of these treasury plays. Some I'm not, some I am, and people are going to get, and people are going to pursue that as well because they see it as more of a levered play without a lot of the inherent levered problems. So we're definitely going to see a mix of investors that want ETFs, and then some that want treasury, some that want both. I frankly want both right now. But I think in the long run, your financial advisor is going to put you in a pure ETF. Stephen, you guys are rolling out or potentially rolling out staked ETFs. Do you think this is coming fast? What's your opinion on staked ETFs? I think that it's really the only way to go. I think about it in the same terms of, I created a lot of fixed income ETFs in the 2010s. Things like bullet shares, which is now a big suite that Invesco has. And yield is extremely important in ETFs. It's extremely important in closed-end funds, extremely important in mutual funds. If there's a yield that's available and you're not getting it, then it's probably something you don't want to buy. But if you are getting it, then it is a diversification to your income, whether it's from a bond or from a cryptocurrency that has a proof of stake. So allowing for the SEC to allow staking, and when I say staking, I specifically mean to validators on the network, not DeFi staking, then it's an integral part of that token. And I think it's very important that the SEC allows it, number one, and that we offer it and offer the clients as much yield as we can from those products.
Do you think they'll understand it? I was looking at a tweet by Kathy Wood. It says, I can't say I understand all the details here. Ethereum, they're talking about the proposition for scalability and other things around the use case of crypto and digital assets in general. Do you think, and I don't want to say boomer, but I'm going to just say more advanced institutional investors that control a lot of wealth, do you think they're going to start to really understand? Do you think they'll learn quickly and we're going to see kind of a flood of assets? I mean, what do we have, 70 trillion sitting in money market funds right now? That's a lot of liquid assets just looking for a place to go.
Yeah, so one of the things that we do is we offer private trust and have for years that offers a cryptocurrency that then stakes to a validator and offers yield. And a lot of professional investors understand the concept of getting yield out of something. I don't think a lot of them understand exactly where that yield is coming from, though.
Right.
So there's a massive amount of education that needs to be done. And the way that I explain it to people is like, look, you buy JP Morgan stock, you understand what JP Morgan does. They are, they're a multifaceted organization, but they're a bank. They earn interest and they pay some of that interest out to you in a dividend. That it's very simple, right? They charge things like transaction fees and other types of fees on their deposits, in just very simplistic terms. And of course, give you the rest. These are networks for moving things like capital and assets. And when they move these financial assets around, you are earning a yield simply by helping facilitate the network, and those fees that come in, you're getting the benefit of that because there are fees that come off the network, and we're supporting the network by validating those transactions.
Yeah. Well, and I think you're hitting on some very key points when you think about how people are going to understand digital assets in general. We're in a very early state right now. Obviously, just a handful of ETFs out there that are effectively launched and really, I think, taking on, obviously, iBit's performance has been just, stellar. Now BlackRock kind of completely understands the model here. You have a lot of things happening with the banks who are trying to play catch up as well. So I think we're going to see a lot of that pushed in. I want to get to the last point here, and that is international blind spots, because as we watch the rest of the world start to move into digital assets, there's a handful of places that are hot spots. One, of course, South Korea, most preferred token over there. This is ahead of ETH, is XRP. And if you think about that and also what they're doing in terms of maybe other countries that are starting to roll into this area of preferential treatment around certain digital assets, is there any area that you feel are maybe here in the United States, we're just not paying attention to what's happening, globally and internationally?
Yeah, sure. I mean, there's really 5 countries that I've paid attention to ever since I've been in digital assets because they're major drivers, and a lot of people don't think about it, but South Korea is probably the biggest driver of price and interest in cryptocurrencies, even more so than the U.S. at oftentimes.
Interesting. Okay.
So, if you look at the trading pairs, for instance, dollars and wons versus cryptocurrencies, at certain points, there will be more trading pair volume against the won than the dollar. And we actually hit that point, I believe, for one quarter last year, and then most of 2017, most of 2018, it was Korea. China was, China's on and off. They were pretty big in 2017 and 2018, and then cryptocurrencies were banned. Japan's interesting, Singapore's interesting, and of course UAE's interesting.
Yeah.
So actually, a year ago, I went to Korea Blockchain Week before we even launched Canary, and I was just kind of poking around, seeing what was going on. And it's actually the reason why we launched Canary was the understanding that I got visiting Korea Blockchain Week, and then of course visiting Japan a week before that, and it really showed me which cryptocurrencies were popular just by going to the different side events and talking to people. And of course, it's the reason why we filed for or one of the reasons why we filed for the XRP ETF was because it was so popular, as was HBAR, as was a handful of other tokens that people weren't really thinking about in the US. So it definitely drives our decision on what's going on in other countries.
And I think your point being is that there are certain areas of the globe right now that are starting to move much more aggressively than the United States, even though I feel like this week may be the pivotal time in which maybe things shift quickly. We'll see, Stephen. So we'll definitely have you back after all of this, because I imagine there's going to be some fireworks. But thanks so much for coming in today. We appreciate it.
Hey, thanks for having me, Paul.
You bet. All right, excellent. You guys are, if you're not in the Diamond Circle, make sure and jump in on that. That is our own private group. You guys can join. It's absolutely free. We'll leave a link down below. Of course, follow me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.